Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I am audible to you. Yeah, fine. Thank you, Sandra. Thanks for confirming the audibility. Let me display the PowerPoint presentation. Asian session live market analysis on 7th of May between 5 and 5:45 GMT. I'll give the expected market moves for this particular week, 7th to 11th of May 2012. So normally my trading analysis goes with three strategies, namely the derived forecast. So it is an algorithm based derived forecast, and that I give update on a daily basis in my website iknowindices.com/blog. And again, during the Asian session live market analysis on Monday, I display the expected market moves for today, and later on I'll also explain what are the type of moves we are expecting during this particular week. Then the other part is market reading. For that we make a note of the initial lows and the highs around 3:30 GMT in 4 majors and 2 commodity pairs, and then use them as the reference levels to identify the type of moves. They do it in sequence during the day, and all our tracking of the market will be in GMT time. Still, we always keep in mind our forecast or the market reading can go wrong because the market is very sensitive and can react to any sort of triggers. So we use the trading strategy. One of the basic trading strategy, namely using the hedging order or the entry stop in a loss making position. As soon as the position is taken, it will be making loss with regard to the pip spread, and we try to keep the hedging order 30 pips below that of the market if it is a buy position, or 30 pips above that of the market if it is a sell position. If the hedging is not available, we try to use the stop to limit the risk. Then once the position makes profit, then we try to keep stop at entry and remove the hedging order or the stop which is kept away from that of the original position, and try to trail the stop once the position makes profit of 25 pips by maintaining 15 pips trailing stop. Then we try to keep that limit or profit taking level closer to that of the opposite side. If you are taking a buy near that of the low, then near that of the high, we'll try to get the limit. And if it is a sell position, then we'll try to keep the limit near that of the low set for the day. Then in the case the going is good, then we try to move the limit order away from that of the market, but not the trailing stop. So this is the basic trading strategy with which we try to earn irrespective of the market condition, whatever be the trigger they try to give it, and things like that. Now with regard to the initial lows and the highs set for today. Today is 7th May. In the case of Euro, 1.2956 is the low, and the high was 1.3032, and which is set around 3:30 GMT. Before that, they have set the low and the high, and they have not breached it. I'll try to give the live market code page link and also compare it with the live market code page, the initial lows and the highs. GBP formed the low 1.6116 and 1.6155 is the high. Then USDN 79.65 is the low and 79.98 is the high. You find the spread is narrowed here, and also in the case of GBP, only in the case of Euro the spread is more. Then in the case of CHF, 92.15 is the low and 92.71 is the high. Then Canadian dollar, 99.48 is the low, 99.87 is the high. The spread is narrow. And in the case of Australian dollar, it is somewhat moderate. 1.0111 is the low and 1.0163 is the high, around 50 pips. But if you see that in the live market code page, let me give the link for the same. I'll also focus the camera over that of the live market code page now. You can see that the low and the high are not changed still, or not breached by the market, but Euro is closer to that of the low, and it has made about 105 pips negative net change. And in the case of GBP, they have made only 28 pips negative net change. still, even though it is closer to low, they are not breached the low. 1.6116 is the low. And in the case of yen, it is showing negative net change. Even though euro and GBP are showing the USD gaining move, USD yen is showing the USD weakening move. And it has come below that of 80 on Friday, on the weekend, and they have made a nominal 7 pips dip during start of the week, and they came down to 79.65 and started gaining the level. Still, the high is below that of 80. So this is mainly to handle the crosses. When we know that they make the contrarian move, this is mainly to handle the crosses on the downside, especially euro yen and GBP yen. And then you find that is the euro yen, it is about 86 pips negative net change, and the case of GBP yen, it is about 25 pips negative net change. So if you see in the case of the crosses, they are making more positive and negative net changes. In the case of euro CAD, 84 pips negative net change, and in the case of GBP CHF, they have made 93 pips positive net change. So this is how they just make big moves in the case of crosses for the week beginning. And later on, they will come to that of the majors. And the French election as an excuse to make that drop in the case of euro. And later on, you will find that they can use the same as a positive news to gain the levels in the case of euro. So that is how the market reactions are expected to be. So they are not breached the low, initial low or the high in the case of euro, initial low or the high in the case of GBP and yen, and also in the case of CHF, Canadian dollar, and also Australian dollar. After making the week beginning false move during start of the session, and euro came down to 29.56 and started making the move upward. And still they are not breached the low what they have formed. If they would have breached the low after about 30 minutes, then we know that they are trying to make an extended move for at least 2 hours. And in case if they breach beyond 2 hours, the new low, then we know that they intend to make an intentional move on the downside for 2 sessions. But at the moment, we find that they have made only a week beginning false move during start of the session and come above and still holding closer to high. Now in the case of GBP, is just 1 pip away from that of the initial low, and the much talked about 0.80 they reached in the case of euro GBP that I was explaining to you. But in the case of euro CHF, they are still holding at a lower level, 1.2010. They took nearly about 2 to 3 weeks just holding around 1.2050 to 1.2010 area. So you can understand that they make small dip and hold it in order to create uncertainty to that of the long holders in the case of euro CHF for them to shed the positions. Then later on they wanted to gain the levels in the case of euro CHF. So this is how they handle the different type of crosses differently depending upon the volume of the traders' participation. So in the case of euro GBP, the pip value is very high. The trader participation is also equally good, similar to that of the majors. So they make very wild moves here. And also in the case of yen crosses. The other crosses, they make mostly one-sided move for a day and then reverse the rest day and things like that. Now I'll come back to that of the PowerPoint presentation. So expected market moves for today. So a dip and in the form of moves are expected during that of the Japanese session. So they are expected to slowly firm up and then again make a dip during that of the European session. And that dip, they could breach the initial low and make a downward stoppment, and with which a quick downward move, it could trigger an upward rise. So here it will be a firming up move, and later on there will be a quick rise from that of the mid-European session, and swing and rise moves are expected during that of the US session. So last week I was explaining to you aggressive volatile moves may be seen in Euro, GBP and USD yen. They have done it. And now this week, the week beginning false moves are expected to happen, and later on they are expected to gain the levels in the case of Euro, GBP and USD yen. So on daily basis, you can make a note down or make a note of the initial lows and the highs and from there of the live market code page. And from there, you try to derive exactly they are making different types of moves. And then that can help you in making trading decisions. Now, coming to the rest of the days in this particular week. So today is Monday. Monday, Tuesday, and Wednesday, they are expected to make uncertain sideways moves in the market and a little bit of gain and losing the gain and this sort of thing. As a result, the traders might lose the patience and start liquidating the long positions they are holding at a higher level. Then they are expected to aggressively gain on Thursday using the BOE interest rate decision time, and also Friday they are expected to gain the levels very fast. And till Wednesday they are expected to make nominal gains, but not a big drop, but nominal gains that may give the impression that market is really subdued, but subsequently they are expected to gain the levels in Euro, GBP, Australian dollar, and also in the case of the denominator currency, USD and USD CHF and USD CAD as well. They will not make simultaneous gains, but they are expected to make the alternative gain in order to handle the respective crosses on the downside as well as the upside. So this is what normally we come across. Every time there might be a different news as a trigger for the market. This time around, you find it is not Eurozone crisis, it is a French election. So they use the release of the news and try to give different type of interpretations. There might be the change of guard in that of the government, but ultimately there cannot be much of a drastic changes in the country for that matter, because the bureaucrats advise that of the politicians, and the politicians can take appropriate action only based on the current conditions and situations. They cannot simply say that, no, we are not going to collect any tax and things like that. So understand these elections, changeover of the parties, etc. They got the limitations with regard to the governance. So ultimately the governance is not expected to undergo radical changes, but the policy is announced before the election. The players will try to use it and give different type of interpretation pertaining to that. As a result, they will indirectly derive that euro could strengthen or euro could weaken and things like that. But when euro started gaining the levels, they may just forget about French election. They may talk about the economic conditions of Germany or other countries or things like that. This is how the market is being manipulated on a daily basis, weekly and monthly basis. These things we need to understand. So none of the triggers remain permanent in the market. They act as trigger and have a short life, and the next trigger comes in, that earlier trigger is forgotten. So keep that in mind, then it will be useful for you to take appropriate trading decisions. So Monday is a week beginning false move. Tuesday and Wednesday they are expected to firm up nominally, and that might look as if the market is very, very slow. Then Thursday and Friday they are expected to make the aggressive gains on the upside. Not volatile moves, aggressive gains are expected from Thursday and Friday, and they could use BOE interest rate decision as a trigger for that and try to gain the levels. Let me minimize the PowerPoint presentation and try to answer that of the questions which are asked here. I just shown the slide. Or is it not available? I'll just display the slide again. So the initial lows and the highs, you can make a note of it. You can also refer it to the live market code page. You can see that GBP, they have come closer to low, but still not breached. AUD, they are firming it up. Sorry, Australian dollar also they are firming it up. Euro and Australian dollar, they are firming it up. And GBP, they are holding it closer to low in order to make a small pullback in the case of GBP crosses and also Australian dollar crosses. And later on, they are expected to make the breaching of the low during that of the early European session. At that time, if you try to take a buy, then you will be able to keep stop at entry quickly and earn during the rise during the European session. And on Friday, you might be aware, for the non-farm payroll, they made very quick moves. Before the non-farm payroll, they just firmed up in the case of Euro and GBP little bit. And once the non-farm payroll was announced as 115K and it was less than the expectations of the market, they just made the drop. Everybody thought that Euro and GBP will go up, whereas they made the drop in the case of Euro and GBP and given the impression that it's a risk aversion. So this is how the interpretations could be. Then after about 15-20 minutes, they started gaining the levels in the case of Euro and GBP and quickly gained it, and probably the explanation could be the USD weakening move because non-farm payroll was less than expected. And you know that when they gained quickly the levels in the case of Euro, I immediately sensed a lot of traders have jumped into the market after the rise and gone for a technical trade on the upside move, and the players are smart on the weekend and they simply made the drop and breached the initial low set on Friday and came below and held the market at a lower level and induced all the traders who had jumped into the market after the rise to liquidate the long position. So that was a profit booking sentiment. So this is how you find in the case in the market, for the same trigger, they can give different interpretation. It is a classical example. They have initially made the risk aversion move and then USD weakening move because the data was negative to US dollar, and later on the big end profit booking move in the case of Euro and GBP. So what the fundamentals can explain there for the up and the downward moves in the case of Euro and GBP on Friday. So always keep in mind that the players use the trigger in order to just give the excuse to that of the traders to believe that that is how the trend is going to be. And when the traders enter into that of the market after the visible trend, they change the trend. So ultimately, the intentions of the players is to induce the traders to commit positions and trap them. And so what is visible is not true as a trend. That is what I always explain in the market. So if you keep in mind that how they try to trap the traders, then we can escape from such traps. And if we again and again enter into the trap, that means we are not able to envisage what they are trying to do it. In such a scenario, the only helping hand can be obtained from that of the trading strategy. Because when they suddenly reverse the market and things like that, if you use the hedging order, the hedging will limit your risk. And then if it is hedged, you can handle the hedge later on by relating to that of the market, whether the market is going below the low and continuously moving downward, or it was just a brief downward stop and during which we are hedged. In that case, we can just close the hedging and keep another hedging order to limit the risk. And when they make the upward move, continue with that of the higher level buys. This sort of trading strategies are very essential in the market because limiting the risk is the prime most important aspect of the traders because our equity is limited. We are not trading with unlimited equity like that of the players in billions, whereas we have our limited equity, so we have to conserve our equity carefully, and so we have to fine-tune our entry to start with. And once you decide to make an entry, now in the case of GBP, they have come closer to low and they are about to breach the low. Still, let us watch whether they are breaching 1.6116 now during that of the late session. So from 5:30 to 7 GMT is the late session, the last 1.5 hours. So at that time, they might make a downward stopper and then gain the levels. During the European session, they might make a downward stopper in the case of Euro and go up. So that is what we derive it. So during such downward stopper, we can try to enter into the market, and that will give us a good profit. Because ultimately, the players can only make an upward or a downward move and alternate it. So if you know which way they are going to alternate it, we can just enter into the market, identifying the type of moves they are trying to do it. Here they are holding near the low, and now the bid in the case of GBP is 1.6115. The ask is 1.6117. They will try to push it downward a little more, and ask will become 1.6116. Immediately the traders holding long position will liquidate, thinking that the candle is going to close below that and things like that. And later on they may make only about 2-3 pips or 10 pips drop and then start making the recovery. So this is the way they try to trap those who are following the technicals and identifying the supports and the resistance. Those who are following the fundamentals also, they try to trap, make a dip, and immediately people think that euro is going to come to 1.28 and try to take a sell. They trap and induce them to do the short covering. So if you follow the fundamentals or the technicals, the players are not there to give straight away the profit for us. This is what I need to understand. Let me minimize the PowerPoint presentation and just focus the camera over that of the live market code page and try to answer to the questions we are asked here. So there is a question from Balaji, I think. Can you please explain the levels of euro for the week end, this week end and month end? See, euro has made the downward move for the week beginning and the below that of the psychological level 1.30, which might give that impression to that of the traders it is going to underperform when compared to that of GBP. And you can see that they are expected to gain the levels again, and they should be able to see on a weekly basis they can gain about 350 pips from that of Friday close. So Friday close was 1.3085. From there you can add about 350 pips roughly, and that could be the high for the week. And in a month they can gain about 900 pips to 1100 pips, you can estimate. That is a potency, but there is no need for them to gain all the levels. It all depends upon the traders' participation. If the traders take very good sell positions at the lower level, then the players make big rise in order to induce them to do the short covering. The traders are just taking again buy position predominantly, then they may not gain much. They may simply hold and just make an upward stop and downward stop and alternatively. And also you come across for a prolonged period in the month of April and early May, they have been doing sideways moves. And these sideways moves are primarily because of certain uncertainties prevailing among that of the players. So it could get resolved soon and we should be able to see good moves happening in the market. Then Jack, where can we get info about the volume? See, nowhere you come across a direct information pertaining to the market volume because they do not want to disclose it. As far as Forex market is concerned, it is not only the trading volume which is taken into consideration. And the actual volume is estimated this way. Suppose you take one lot of euro position, then it is 100K. So even though for you it is one lot, you pay only $1,000 or $500 as a margin, but it is considered as 100K position. So similarly, when the traders take such 100K positions and 200K and 500K positions, etc., then you find it can go to the of trillions. Besides the trading, you come across the derivative market, futures and options, where suppose I got a buy position in euro in the spot market, I try to keep a sell position in the futures market. So that is also added to that of the volume. Then you also come across the currency conversion volumes. So you know that the currency is like US dollar. Suppose you want to convert US dollar to euro, you cannot just do it outside US. It has to go to US bank and there it is getting converted and later on it is transferred to your bank. So that is how you find the nodal agencies are there for different currencies. and the currency has to physically, the instructions are to go there and then they reverse it. So on a weekly basis, they go in for a settlement of just physically transferring the currencies and things like that. It's a very complicated system which is working. So whenever you are sending currency, it is not physically going to one country to another country and then going back to the third country, etc. So those volumes are also taken into consideration in order to estimate the overall volume of the currency trading. But actually, the normal leverage trading, if we take into consideration the leverage trading in the market, which falls to about 20 to 30% of the overall volume, what they project in the market, 4 trillion or whatever it is. Then of that, you find that leverage trading, futures and options are also leverage trading. And if you take into consideration the spot market trading, it will be hardly about 10 to 12%. And that volume alone, you just wanting to know, still it is not possible, because the various platforms and the banks, they don't disclose the total volume as such in the open market. So it is next to impossible to identify the volumes, even though they know indirectly what is the volume. So you find that certain platforms offer this caught volume and things like that, and they are all having limited applications according to me, with which we will not be able to really determine what the market is trying to do. Then JAG, USD-INR, the month beginning and the month beginning, they just gained the levels up to 53.70, 53.80 area, and from there they are expected to make the slide. And for the week beginning, they just already made the quick upward move and started making the slide, and they're expected to make further slides during the week. And Robert. Is a mid price between the high and the low significant? Not at all significant. When they are holding in the mid level without bringing in much of a change, that means they are looking for the traders to commit positions during mid sessions. So they will be focusing on the crosses. You'll find the crosses making somewhat moves, but the majors may be just holding flat. And so when they are holding in the middle levels, don't just commit yourself. You always look for the early session trigger and the late session trigger to participate in the market. When they make a downward stop and see that it is only at stop and not an extended move or intentional move, and then try to take a buy position. Still, our reading can go wrong, because only based on the time we will come to know whether it is an extended move or intentional move. We might think that it is a stop end, but later on it might be an extended move. To limit the risk, you have to use the hedging order. So that is a basic idea of the trading strategy. Then Scooty. Last Friday, Euro session, 2 hours continuous drop. So 2 sessions downward side. Is it a return third session? Yeah. And they actually made the slide on Friday from that of the European session. So European session and the US session, they made the drop. And for non-farm payroll, they just made the gaining move to start. First a drop and then gaining move in the case of Euro and GBP, but that was short-lived and they started making the slide again. And they are accumulating more of a buy position in Euro and GBP. And if I say, people may not believe it, and they might think that the players are sellers. And always keep in mind, they drop the market and buy, rise, and book profit. But when they rise, we call it as a bullish market. When they drop, we call it as a bearish market. It is unfortunate. Then JAG. Then an off-topic question. Do you foresee Greece will exit the Eurozone? I don't think so. Then Shan. What do you view on Australian dollar this week? Australian dollar has made a downward stop end for the week beginning, but lesser when compared to Euro. So they are expected to gain the levels in Australian dollar. I don't think it is expected to go below parity in this month and next month. So it is expected to gain the levels, and they are just dropping, inducing the traders to liquidate long before making the rise. And you know that our GBP, they have been doing it like that, 1.5857 like that. And now they gained it, holding it. And now that's similar condition you'll come across in the case of Australian dollar and the euro. Then we might be surprised. We might be thinking during the French election time, we could have taken a buy position. Always we repent after the market move. That is part of trader psychology. Then Ahmed. If the intentional move starts during the US session, will it run for the next Japanese session and early US European session? You are right. Yes. Then Shans. Is it a long shot for Euro and GBP to gain beyond 1.35 and 1.64 respectively? No, it is not a very long time frame expectations, and very soon we should be able to see such quick aggressive upward moves in Euro and GBP. And then we might be surprised. Then Pico. No opinion of what pair downside is much limited, Euro GBP and the USD Yen. USD Yen, the downside is very limited, and for GBP as well as Euro and Australian dollar, the downside is very limited. And also they had done all the downward stop in the case of CHF, and they are expected to gain the levels. When Euro and GBP are gaining the levels, CHF, they may not drop correspondingly. And last week they had done the downward stop in the case of Canadian dollar, accumulated the long position, and they are expected to go above parity and start gaining the levels in the case of Canadian dollar. And so very soon you will find USD CAD also going above parity and start going up, and Australian dollar also alternatively they are expected to gain the levels. Jack, I explained that USD INR is expected to make the slide. They have done the week beginning false move on the upside. Then Tepo. If market is not moving as per economically, so it is kind of gambling. No, I don't think it's total gambling. See, these are all nothing but the crosses. Euro USD is nothing but the value of Euro divided by value of USD. And then you come across a quotient, and that is referred as 1.2980. So they are all nothing but the intrinsic values. From time to time, these values change depending upon the sentiments. And so it is a sentiment-driven market. When a market is sentiment-driven, you come across predominant of the commodities and even the consumer durables, for example, it is also sentiment-driven. Say, for example, if you want to buy rice or wheat or whatever it is, and if there is a sudden release of the news that there could be a shortage of rice or wheat, and immediately a lot of people go and buy and store it for the future. Then there is a demand, sudden demand created for such commodities. As a result, you find the price go up. So this is the normal demand and supply situations created based on the sentiment. And you know that there are other natural calamities. So somebody may say that there is going to be a typhoon and things like that. Immediately people go for the safe places and try to procure the essentials and try to keep it with them. And during that time, you might find suddenly the prices go up. Then later on, when they say that there is no tycoon and it is not going to affect any part, and you find that the prices started sliding. So this is the normal herd mentality you come across with regard to the commodities or any purchasing abilities and things like that. So you find that gold, which is considered as a reserve. Now, gold prices are being determined depending upon the demand and supply. That is what we say. But also you come across when there is a more uncertainty with regard to the economic conditions, gold price can go up further. Why? Because people wanted to go in for the safe haven strategy and try to accumulate gold or go into any particular currency pair which is considered as a safe haven. Okay. Now, when the people go in for such gold or any safe haven and things like that, if there is a real crisis, can anybody eat gold? It is not possible. They can only keep all the reserves in gold, but they cannot still supplement it with that of the essential commodities. You might be able to buy it at a higher price, the essential commodities, if they are not going to be available in plenty. But still, it is next to impossible for them to just eat gold. So obviously, you know that it is a question of sentiment which is created. So when the sentiment is created, immediately an artificial demand or an artificial supply can grip in. So the players, what they do is they exaggerate the news. They exaggerate some of the events which are happening in the world, or sometimes they suppress such events and simply say that it is discounted in the price, already built up in the price and things like that, and start making the moves. So if you go in for the genuine supply and the demand, then our charts will work very well and we'll be able to follow the charts and do the trades at ease. But the players create suddenly artificial demand and artificial supply. Then when they create, now there is an artificial supply of euro. So euro has come down. And if you think that it is people are really wanting to exit out of euro and trying to buy US dollar, you might be fooled because they may again buy it at a lower level and rig it and go up. Now they had just made, in the case of GBP, 1 pip downward stop. So even though they had been holding it closer to low for a long time. See, this is how they just create that sentiment and want the market to close the candle below the low and things like that in order to induce the traders to take the positions. So if you follow merely the technicals, then you come across the problem. Then you would have taken a sell after the drop. And on Friday, I was watching in FX Trade chat when the non-farm payroll was released and they found that euro and GBP started making a drop, and a lot of traders they said that I opened a sell position and things like that. And suddenly, a matter of 30 minutes, they started gaining the levels in the case of euro and GBP, and they said that we were closed our sell and we are taking the technical buy position, expecting further rise. And in another 30 minutes to 1 hour, they started making the drop. So either way, if you try to change your sentiments, the players are here to trap. So always you try to keep in mind that the players have all their equity in US dollar. They pump in the money and drop euro and GBP and buy. They are all positions. No, they are not actual currency conversion. They are all nothing but the positions. They quick sell and just buy it at the lower level and started making the rise by accumulating more higher level buys. Because if you want the market to move on its own, it's extremely difficult for the market to move. Market facilitators are essential. They have to rig the market up and down and give some spikes on the downside and the upside. That is very essential for you to create the market sentiments. But at the same time, always keep in mind that they are also doing it to trap us. So it is not gambling and it is not total gambling. It is a scientific gambling. That's what I can tell you. Then Desmond, how about USD CAD? USD CAD has just all made the downward move to 0.98 level. From there it has recovered and it is expected to continue to recover. And normally in the case of USD CAD, the volume is relatively less. So they make a downward stop and followed by upward stop on a daily basis. Then Australian dollar, Canadian dollar, Israel. Australian dollar, Canadian dollar cross. No, it is a cross of two commodity pairs, Aussie CAD here. So Aussie CAD has made a downward stop and 29 pips negative net change is seen. And if you just compare the net changes in the case of Canadian dollar, it is 21 pips positive net change, Australian dollar 40 pips positive negative net change. So Aussie has dropped more when compared to gains in the case of Canadian dollar. As such, Canadian dollar is a numerator currency and more drop is indicated and you come across a drop of 29 pips. And once Aussie started gaining, Canadian dollar started gaining as a contrarian move. There are many occasions you would have noticed both are showing positive net change and Aussie CAD is expected to go. And whatever the quick drop you come across in the crosses like Euro Yen and also Euro GBP, then CHF Yen, Euro Canadian dollar, then Euro Australian dollar and GBP CHF. Euro New Zealand dollar. See where you come across big moves more than 40 pips. You will find during the day they just reversed. Just for academic purpose, you just make a note of it. We'll be able to understand how they make moves in the market. Then will rise, Gregor, will rise in Australian dollar yen in May and June? Yes. Australian dollar is expected to gain the levels in the month of May, and also USD yen is expected to gain. As a result, Australian dollar yen is also expected to gain levels during this month. Then Ram. Will euro go to 1.28? It is very unlikely, and I know, Ram, you ask similar questions every time. And when the level comes that you wanted to see my reactions and things like that, but it is not expected to go to further lower levels. The way in which they are handling it, they are expected to, because this month they are expected to make very aggressive gains, and for that they have made a downward gap opening in the case of euro, and afterwards stop cutting the low, and they are gaining the levels. In the case of GBP, again they are just making a dip to create the market sentiment, and later on they are expected to reverse the market. So let me go back to that of the PowerPoint presentation. So with regard to the initial lows and the highs, GBP alone, they formed the low 1.6115 as the new low, and still not much of an activity in the case of euro. They are still not breached the low, and in the case of euro, and also in the case of USD yen, they are not breached the low, and CHF also, they are not breached the low or the high. So CHF they formed, yeah, it is not high. And also Canadian dollar, they are not breached the low or the high. Australian dollar also, they are not breached the low or the high. They are slowly firming up in the case of Australian dollar, and also euro. They are expected to quickly gain the levels in the case of GBP and start making upward move. But that will be mostly firming up move. After initial dip during that of the early European session, they are expected to make further drop. And there is a question, will USD CHF retrace below 92 level? No, 0.92 it is not expected to go below. Also, will USD CAD retrace below 99.50? It is very unlikely. Let me go back to that of the next slide. Expected market moves. Dip and firm up moves are expected during Japanese session, and a quick dip could happen during that of the early European session. That will be a great buy opportunity. You can just watch it. If they stop cutting the new low or low for more than 10 minutes to 30 minutes, you can initiate a buy. Still, our reading can go wrong. Keep the hedging order to limit the risk, and once the position makes profit, keep stop at entry and try to maximize the profit during the rise. And swing and rise moves are expected during European session. Slow gains are expected till Wednesday. On Thursday and Friday, they are expected to make more aggressive moves. And last week, it is more of the month beginning, the volatile moves, and we'll come across the trending moves happening from this week onwards. So I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar. And we'll meet again on Thursday, 10th of May, during yet another session of Asian Session Live Market Analysis webinar, and I will try to analyze the calls what I have given or the expected market moves based on the forecast what I have given, and try to explain on Thursday how they could make further moves on Thursday and Friday. On a daily basis, I update in my blog the expected market moves, and those who are interested who can just see the or view it as a guiding factor, and then subsequently you can take your trading decisions after doing the market reading. Still use the trading strategy to limit the risk. So thank you one and all. See you on Thursday.